Hi guys, welcome back to Trademanza's weekly stock market recap series. In this video, we bring to you all the interesting events from the market over the last week and what you can expect from Nifty in the coming week. Before we get started with today's video, subscribe to our channel, switch on notifications and like our videos, and also don't forget to download our app so that you can try out our fun games and quizzes to make the stock market a very gamified experience for you. Now, let's get started with today's analysis. As we discussed in last week's video, we said that the range for Nifty in the next week could be somewhat between 17,200 and 17,800. While the 17,200 level was broken, Nifty found support at 17,100, from where it was extremely bullish and it looked like the market would continue going upwards. However, on Thursday, the US stock markets gave a very bearish close, and because of that, our market followed that on Friday and closed in red for the week, even though it was looking bullish. And on Friday as well, the US stock markets have given a very bearish close. So we can expect this bearishness to be followed by our market on Monday as well. If we switch to a time frame with some moving averages, we can see that the candle has now closed below the moving average and looks slightly bearish. And switching to an hourly time frame makes this chart look even worse. After making a double top, Nifty is now taking resistance at the moving average, which is 17,450, and below the levels of 17,300, there is no very good support close by. The next straightaway support level is 17,100 and then 17,000. If we are to take a look at the option chain, we can see that the number of calls sold at 17,500 levels are almost double the number of puts sold, indicating that this level is definitely going to be a resistance for the next week. If we are to take a look at the option data on 17,200, while the number of calls sold are very less and the puts sold are almost 10 times more, which indicate that 17,200 could be a support. The problem with this data is that these positions were built on Friday, and people on Friday had no idea that the US stock markets would have such a bearish close, and that would be made worse by the fact that the Ukraine and Russia news has made the global stock markets very bearish. Moving on to some stock specific news, metals have still had a very good week. Tata Steel reported a consolidated net profit of 9,500 crore for the third quarter. This is an increase of 159% from the 3,700 crores in the corresponding quarter of the last year. The steel major's revenue from operations rose 45% for the period, and sequentially, the revenues were broadly stable as improvement in rent realizations was more than offset the drop in volumes. On Friday, ahead of the results, Tata Steel shares closed 0.6% higher to settle at 1174 apiece on the NSE. In the last 1 year, the script has given returns of 71%, even after there has been a good correction in the metals in the recent weeks. Another metal company which has had really good weeks is Hindalco because of the increasing prices of aluminium. The third quarter net profit rose, beating estimates, aided by higher revenue and lower finance costs. The net profit of India's largest aluminium producer rose 7.5% sequentially, according to its exchange filing. The company, with 3,334 crore consensus of analysts, is tracked at Bloomberg. Revenue rose 5.5% to 50,000 crore, whereas analysts had expected it to be around 47,000 crore, which is a lot better than expected. Operating income declined 3.2%. However, it's still in line with analyst estimates of 7,300 crores. This was mainly on account of lower Indian aluminium division's operational performance. The EBITDA also increased by 7.5% to 3,700 crore, and EBITDA of its Indian aluminium business growth 4% over the previous quarter. Another stock which had its results was Bharti Airtel. The Q3 results have been good, and the analysts have retained a buy rating on higher ARPU and 4G user additions. The analysts reiterated their buy rating on Bharti Airtel on its higher revenue per user, the 4G subscriber additions, and growth in the Africa unit in the third quarter. The carrier's net profit fell over the preceding quarter, missing estimates, as finance costs and expenditure, including network operating expenses and accessing charges and marketing fees, also jumped. Bharti Airtel added 30 lakh 4G customers in the third quarter and 3.4 lakh users in its home business. Its ARPU, which is the amount an operator earns per subscriber, rose 6.5% sequentially to 160%, which is extremely good. If you have been following our videos regularly, we have mentioned that Airtel has said that 180 to 200 is the kind of ARPU it wants to be at to have very consistent profit margins. And as we can see, Airtel is slowly getting there. In other economic news, the RBI has kept the rates unchanged and it sees the full year 2023 GDP growth at 7.8%. Some have said this is Saktikanta Das's boldest move ever, as while the rest of the world is scampering to increase interest rates, he has kept interest rates unchanged. The Monetary Policy Committee has opted to maintain an accommodative stance while leaving the repo rate, the reverse repo rate, bank rate, and the marginal standing facility rate unchanged, the RBI governor announced on Thursday. The MPC also opted to keep the marginal standing facility unchanged at 4.25%. Furthermore, the reverse repo rate has also been left unchanged. This is the 10th consecutive time that the rate has remained unchanged. The central bank had last revised the policy on May 2022 2020. I think it's finally time for India to start increasing rates as well. Do let us know what your views are on this opinion in our comments. Moving on to the news which has made the global stock markets very nervous right now. The White House on Friday said that a Russian invasion of Ukraine could come within the week, possibly within the next 2 days, even before the end of the Winter Olympics, and they have urged Americans to leave the country now. US National Security Advisor Jake Sullivan said that the United States did not have definitive information that an invasion has been ordered by the president, but he said all pieces were in place for a major military operation that could start rapidly. The risk is high enough and the threat is now immediate enough that prudence demands that it is time to leave now. Even European countries have started asking their citizens to get out of Ukraine now. This could make the global scenario very, very, very cautious, and because of things like this, the stock market investors are going to be very careful over the next few weeks, and we could expect the bearishness to stay as well. So, guys, that's it for this week. Stay tuned to our channel for more interesting videos such as this one.